What's up guys, welcome back to my weekly reflection. It's currently the 8th of July and I'm not gonna bother taking any trades today because it is a no news Monday, as you can see right here. So it's no news, it's Monday, just better to stay off the charts in my opinion. But I'm gonna talk about last week, which was a pretty interesting week. We had news on every single day except for Thursday, which was a bank holiday. And these were the trades I ended up taking. 2 trades on Monday, 1 loss, 1 break even, 1 textbook setup that I did not take on Tuesday, another loss there, so -1 on Tuesday as well. And then on Wednesday, I ended up making every loss back from the beginning of the week. And basically, I ended the week with a break even, a little bit of profit. But yeah, this nice setup really saved me. And then, yeah, let's go and talk about the trades I took and my most important lessons, because it was a really interesting week. So let's hop on the charts. So if you guys have been following me for a while, you know that I basically trade based off cracks in correlation. So I'm in Days mentorship. I followed Justin Werline. I basically combined and made my own kind of way of looking at the markets, and these concepts just make too much sense for me. It's just how the markets move. Like whenever there is a reversal, there is always a crack in correlation. And so a crack in correlation, what does that mean? It's an SMT, it's a precision swing point, which is basically the same candle but up close on ES, and then for example down close on NQ. So that's all just signs that correlated assets, they show cracks, and whenever these cracks occur, then you can use that to frame a reversal trade-off, right? So the last couple of weeks, I've learned that you should focus on the side of cracking correlation that holds more context, that holds more importance, right? Because let's say you have an SMT at the bottom and then you have an SMT at the top, at the highs, then which one should you trust, right? So of course, now I realize that the one that has more context, like let's say the bullish SMT, it is when we already have bullish higher time frame order flow. It is when we have bullish structure, and it is when we have a higher time frame SMT. Let's say the bullish one covers a higher range, is on the monthly instead of on the weekly on the top. So all these things, and especially also drawn liquidity, if the drawn liquidity on one side is more obvious, then you should trust that SMT, right? So taking that lesson with me last week, this is where I made a mistake, is I did not see this monthly bearish SMT on the Forex market. And whenever we have, yes, we can have SMTs between the Forex market and the and we can take that with us on the indice market. Whenever we have kind of SMTs like this, these hold really much importance, right? I was too focused on a weekly SMT at the lows, and I ended up taking longs right here at New York Stock Exchange Open. But I did not realize that this is basic logic, right? This one is more important. It's a bigger range and it's supported by this daily SMT as well. I should trust this one, right, on Monday. So if you want to see how this monthly SMT on the Forex market looks like, this is basically it. So you take DXY, EU and GU, and you basically look on the 4-hour time frame for the monthly SMTs, and you can see that last week this is the high on EU, this is the high on GU, and of course DXY is inversely correlated, so this is the respective low of DXY. So you can see that in that last week we took out the previous week's high on EU, and we did not do that on DXY, right? And also on GU we did take it out like EU, but not a close, right? This is a clear candle close above this high. So you can see, I'm gonna mark it out, this is a clear SMT. So we can take that with us on the index futures trade, right? So I'll mark this out right here. So because I was too focused on this weekly SMT, I can show you this one as well. So weekly SMTs between days. So let's take a look on ES and NQ and the Dow. As you can see, this was Friday's low, this was Monday's low. Friday, Monday is basically between 2 days. And on NQ we took it out, and on ES, on the Dow we did not, right? So that's the weekly SMT, and I trusted this one, even though we had this one. So that was my fault. And also this holds more importance because we have the daily SMT supporting that as well. So the daily SMT, you look for that on the 15-minute time frame. Basically at that time on Monday, we had a big push up above the previous session, and on NQ and ES, I can show you. Yeah, this was the high, and it got taken out on the Dow, but of course not on NQ. So this holds more importance because it also has a daily SMT, and this one is just a weekly SMT. So of course you can delete this one. This holds more importance, not only because of these SMTs, also because on ES at that time, if you take a look on the 1 hour time frame, the drawn liquidity was also just bearish. Look at this. And especially look on ES. This is just clean low resistance liquidity that we can target for bearish setups, right? So of course, yes, maybe on the higher time frame we're bullish, but this drawn liquidity was just too clean to not take out. So we can take this drawn liquidity also with this setup, and that's why I'm now looking back at Monday, and I should have taken shorts until some point. Like, stick with me until some point, because here's when price reversed, and there's also a reason why price reversed, right? So I ended up taking like a loss because I longed right here because of this weekly SMT. No clean reason, so that's my fault. Also, you wanna short above the true session open. So if you would have taken that short, then it would have been in this fair value gap above the true session open after we had this monthly and this daily SMT. And we were basically having this displacement. So that was a trade at around 9:30 that you could have taken. And then after that, what happened is there was a monthly SMT forming on Monday. So if we delete all of this right now, just this one for now, you can see that at this point, ES took out all the drawn liquidity. You can see here, this is when ES swept all this liquidity. And so now we should focus on taking longs, of course, because market moves from liquidity to liquidity. If sell set is taken out, we're bullish on the higher time frame. We should now focus on taking longs if there's a clean setup, right? There's no point in just shorting after we took out all of this liquidity, right? It's just stupid. It's like breakout traders. So after we took out ES's draw, we know, okay, on NQ also we should not force any shorts anymore. Because the major liquidity pool got taken out. And on NQ, we did not take out the low, right? We had a monthly SMT right now. So now we have a monthly on the top and a monthly at the bottom. So which one holds more importance right now? Now it's a little bit tricky. You should mainly focus on then the newer one, because it basically deletes this one. But of course you need more than that, right? It's not just, oh, we have a monthly, so yeah, we're just gonna long. No, we need more. So after that, we got more because we had a 90-minute SMT as well. The Dow, it basically at around 11 a.m. on Monday, it took out this 90-minute low, so the previous 90 minutes low, and then this was basically confirmed, right? Whenever we have two cracks in correlation, monthly and a 90-minute, and we also had a 1 hour PSP. So if you take a look on the 1 hour time frame and just remove all of this drawings, you can see that this low, where is it? Right here. The 1 hour low is a up close candle, right? It's a bullish candle. But on ES, it's a down close candle, you see? So that's another cracking correlation. So now we could have looked at longs, okay? Because we had a monthly, we had a 90-minute, we have a 1 hour PSP. We took out the drawn liquidity on ES. And we are below the true session open, below the true day open. So now we can look at longs because we want to long below these true opens, right? Also the drawn liquidity was just looking nice on the buy side right here. So yeah, that's just my analysis of Monday. I took a stupid loss just because I did not see all of this. I was just not focused, but this was my review of Monday. If we should have taken long, then maybe I would have taken something like this after we have this monthly 90 minutes, and then we sweep basically this low inside of discount of this range. We tap this for value gap, so maybe after then we inverse this one. You could have taken a trade something like this, right? And then target these highs. Just now looking back at it, it's a nice 2R. So yeah, that was Monday. Let's go and take a look on Tuesday. So on the higher time frame, this is what the price action now looked like. Just neglect all of these drawings for now here, but we basically just around Monday we swept this low, which was the clean draw liquidity on ES. We closed bullish above it. We just wigged below this. We had the monthly SMT from yesterday, remember, but now we also have a weekly SMT. So this combination is really important because after the monthly we have the weekly. So if we ever see something like this, we have a monthly SMT followed by a weekly SMT. These are really, really strong. And this was the A+ setup of this week, in my opinion. Why? Bullish order flow. We had a weekly SMT supported by the monthly SMT. We had a sweep on the higher time frame in discount. Higher time frame order flow looks really, really bullish. And so not only did we have a monthly and a weekly SMT, we also had a daily SMT. So if we go and take a look, just so you guys also see this as well, because only I, of course, know what I'm talking about. So to make it clear to you guys, on the 1 hour time frame on Tuesday, let's take a look. Tuesday, right here. This was the price action. You can see that this is the monthly SMT, right? This is the monthly SMT. We did not take it out on NQ. Let's delete everything right here now. And we had a weekly SMT after that. So here, the low of Monday, the low of Tuesday. The low of Tuesday was taking out the low of Monday on ES, right? So taking that with us, we have a monthly, a weekly, and also a daily SMT, because now if you go and take a look on the 50-minute time frame, which is a time frame that you should use for daily SMTs, we can see that if we pop on the drawings again, take a look at this, you can see that here we took out the London lows. I'm not gonna draw anything, just see it. We took out the London lows on NQ. We did also do that on the Dow, but we did not close a 50-minute candle below it. So that's a hidden sequential SMT, right? So now what do we have? A monthly, a weekly, we sweep a low on the higher time frame inside discount of this entire range. We have also a daily SMT. You don't need it, but it's like way more confluence. And then we are at the open of the day on Tuesday. And then, yeah, let's take a look what you could have taken. Of course, we're looking for longs, but when was the time ready? Okay, we have this daily SMT. What do we need now? Maybe like a 50-minute displacement, of course. So whenever what the fuck is this? Let me delete this. Whenever we have a candle closing above this bearish fair value gap, then this turns into an inverse, and I can just market enter right here. And basically this was the market maker model that you can then target. And yeah, if you want to hold it, you can hold it towards the all-time highs. This was a precision swing point as well, which also holds a lot of liquidity. So yeah, this was a trade you could have taken, but this was at around 8:30 or 9 a.m. So it was before I usually hop on the chart. So a lesson from this week is I'm gonna look at if there's something interesting already at 8:30, because usually then the setups start to form. But yeah, even though if you start trading around 9:30, this was a setup you could have taken. So we had all of this at the bottom, really bullish, and then we displaced up. And then yeah, what you could have taken is after this micro SMT inside discount of this range, you could have taken something like this. But yeah, it's way more risky because we're already displacing a lot before, and you can target the all-time highs. But yeah, would have focused on just trading right exactly after we have a 50-minute displacement after this daily SMT, because then we are also below the true session open, like below the true day open still. So yeah, that's better than chasing the long right here. And then of course 90-minute SMT, but we should not focus on this because it's nowhere near the importance of the monthly SMT combined with all of these bullish context things. So yeah, that was on Tuesday. I ended up taking a loss because, yeah, I was just literally just shorting this 90 minutes a sequential SMT bearish one because, yeah, I don't know, I just thought that we are going to have a 1030 reversal, no really context, and now I did my really good analysis, yeah. Still taking really stupid setups, but it's important that we just focus on reflecting and seeing why this did not end up working out, okay? And then on Wednesday, I ended up taking one really good trade. That basically ended up me on break even with the profit of the week. So let's talk about that right now. So here, I'm not gonna mark and check every SMT, just check your own charts, but it's just the same thing, right? Just look at the previous quarters. Did some asset take out the low or the high, while the other asset did not take out the low or the high? That's an SMT, right? And a sequential SMT. Here, what do we have? A daily SMT, a 90-minute SMT, a micro SMT. Again, this combination is just a sequence, right? A daily, a 90-minute, a micro, these follow up on each other. So whenever we have that and we have a clear bullish context, like this is a clear market maker model, then yeah, you can take trades of that, right? So I took this trade after this micro SMT. So I just entered somewhere right here, even though this market maker model already got taken out, but I was confident that this was actually a higher time frame market maker model as well. So we trade models inside models, of course. So this is the higher time frame one, and this was just a small one that you can play. But yeah, this was the all-time highs. This was my target for this trade. If you go and take a look on the 1 minute time frame, yeah. As you can see, these were the all-time highs. And the reason why I took this trade after this micro also is because we just cleanly tapped and closed above, just formed the wick below this true session open, indicating that we want to go higher. So yeah, also at this low exactly, I'm going to show you just one last thing. We had a minute 15 precision swing point. So if you take a look at ES, the Dow, and Q, we can see that, okay, we already have those bullish confluences, the daily SMT, 90-minute SMT, but this low was also a cracking correlation because it's a down close candle. You can see right here on NQ, it's a down close candle as well on ES, but it's an up close candle on the Dow. So another thing that we can take with us with a bullish confluence, right? So that was my trade on on Wednesday. I also have a folder right here about Friday. Let me see why. Oh yeah, there was also a nice textbook setup that I just want to point out to you guys. Here, what happened here is we had a weekly SMT. We had a 90-minute SMT. And then what happened is, yeah, we displaced up, but we formed equal highs right here. So a really clean draw on liquidity. What did we do? We retraced back to equilibrium. Everyone shorted, but this was just a retrace back to equilibrium, like you can see, to the OTE of this range. And then we had another micro SMT, and then we displaced above this bearish fair value gap, and then we use this as an inverse. And then I think it's a really clean setup to just take the trade right here and target the equal highs, and then you're just out, because I think pretty much after this was just consolidating price action, because we are just at all-time highs. It's not the best time to trade, but this was a clean setup just because we had the bullish cracks in correlation. We had price retracing back to equilibrium below the true session open, below the true day open. We tap it, we displaced back up, we make this an inverse fair value gap, and we have clean draw liquidity. Yeah, and it's not an SMT, it's just literally ES also did not take out these highs. So that was my read of the week. I hope you learned anything. I learned a ton. So for my A+ setups, my playbooks, I added two, this one and the one on, I don't remember, let's take a look. First one was this one, that was on, I think Tuesday. We had that monthly SMT, we had that weekly SMT, we had the daily SMT. We displace on the 15-minute time frame above this bearish minute 15 fair value gap. Market enter, clean, low hanging fruit of the market maker buy model. But of course, this was a market maker buy model within this higher time frame market maker buy model, because we had all of this bullish context. And so, yeah, of course, I'm just going to take it out right here already because it is a good risk to reward. I think this was a really clean trade with all this context I showed you already in the beginning of the video. And then this trade, I just point out to you guys, it was a clean trade because we had weekly 90 micro, we formed a clean draw liquidity, we retraced back to equilibrium, which is where we expect price to manipulate So the manipulation happened here in the form of a micro SMT with this place back up. Use this as an inverse and target the equal highs. So I think really clean price action last week. Let me quickly go to my phone because I have some additional notes from my lessons that I want to point out in this video. First of all, inverse fair value gaps are super strong. This is something I wrote down last week Friday, because here, for example, sometimes I miss trades because I want to long the fair value gap, but I see that this is working way better. This is the bullish fair value gap, but this is the inverse fair value gap. And so I think trades are better to take on inverse fair value gaps because you're gonna get in more. It's also a clean entry model. And you should not always wait for this fair value gap to fill it, because inverses, they work. I was like against inverses for a while, but I see they're working really good right now. So yeah, I'm gonna focus more on taking entries on inverse fair value gaps, which is a bearish fair value gap that is going ran through by a bullish one, and basically forms this gap. So yeah, I think I'm gonna focus more on that because it works out a lot. Also, intermarket cracks hold more importance. So I show you that with the Forex market. If we have a sequential SMT on another market, on the Forex market or on the interest market, those hold more importance than just like intertrade between the NQ and ES. Then I should focus on taking profits whenever the market tells me. It's going to remind me of this every single week because I'm just so bad at taking profits. I should listen to the market and not just be greedy to want more profit. Should focus on whenever the drawn liquidity is taken out on either of the pairs, then I should really trim or put my stop loss to break even at least. And yeah, just listen to the market, be an observer of the market. Let me see what else I got right here. I should start looking at the charts from 8:25 because usually you have nice setups forming at around 8:30. And I'm just going to look like 5 minutes if I have time. And otherwise, I'm just going to do the regular thing, which is I'm going to open the charts at around 9 a.m., 30 minutes before the New York Stock Exchange open. But yeah, just a little note that maybe I should take a look at 8:30. Pre-market is called pre-market. So yeah. So then I want to end this video with the 5 things I find most important to focus on. And that is, first of all, cracks. So SMTs, precision swing points. True opens. I always want to long below them, short above them. Time. So focus on red folder news. Don't trade no news Mondays. Structure. So wait for structure to be clear. And then lastly, the draw on liquidity. Super important. Those 5 things, I think if you just focus on them, you're going to see a lot of progress. So that being said, I hope you enjoyed this video. I'm super excited for this trading week. If you take a look, we're going to focus, I think, most likely on Thursday, which is CPI. And yeah, I think every day except today is a good trading day. So yeah, I'm pretty excited. And I'm going to talk about this week then on Sunday or on Monday. So I'll see you guys then in my next video. Peace out.